Hi, Tim Bigham back again this Thursday for another week with Traders Exclusive, and what a week it has been so far. Certainly, really going back since the non-farm payroll, we have seen really almost every kind of market you can see in literally a 2-week time frame here. So big story, of course, Apple earnings after the close yesterday. Stock, trading well up about 8% last I looked. They basically fired what I call the bazooka. They beat on the top and bottom line. They also issued a 7-for-1 stock split, a little unusual there, but perhaps to get into the Dow. Also increased their stock buyback by $30 billion, and they also increased the dividend. So really everything but introduced the new product, which long term is kind of what will drive revenues. iPhone sales were, surprisingly strong, which some chatter out there, maybe a little channel stuffing. iPads came in definitely light. And going forward, certainly Apple back to a valuation that kind of maybe makes sense here. Not the growth company they were, but probably somewhere around that 560, 570 level. I think it's an area of value for Apple. Otherwise, the market looked poised to maybe make a run at the all-time highs again, but was met with some selling this morning. Briefly went negative, certainly unrest over in the Ukraine, and also valuations that are not cheap by any standard. We're looking at, over 17 on a forward basis. So given the fact a lot of these earnings are being fueled by stock buybacks, revenue growth has been tepid, to say the least, this earnings season. And we probably will have, a year-over-year earnings decline from last quarter. So again, this is a point in the market that I think it may just trudge around for a while, given the fact that, earnings are coming in okay, but that it's a rich market. So looking at some stocks here, looking at names like MU and Sandisk that have been off the charts with, some DRAM price increase, looking to perhaps take a counter trend position there by buying some May puts slightly out of the money, just positioning for a pullback somewhere along the way. Caterpillar, another one. Stock came out with some earnings again today. Revenues were down, but earnings were up sharply. So there again, that stock buyback factor. I believe long-term, sales growth has to come in play here. We're trading at a price-to-sales ratio that is almost at historic extremes here. So a little caution warranted. I bought some Caterpillar May 2nd that expire next Friday, 107 puts. Paid just a little over $1.10 for them this morning. I just think that stock, given the rise it's had here over the past week or so, probably due to come back in. Other than that, again, keeping my position sizes smaller in this market. Even though the VIX looks poised to maybe have a 12 handle on it here soon, I still fear kind of this market, given, the valuations, given the world events out there, and given the fact that we literally have been straight up since that non-farm sell-off. So until next week, this is Tim Bigham. As always, and especially in this market environment, keep those position sizes in place and those stops going. Take care.